morning and welcome. You're watching the small and mid-cap show on NDTV Profit. I'm going to quickly go to the president first. He is addressing the Parliament budget session. Let's go quickly to some of those visuals. There you go. We have visuals coming in straight from Parliament. We have the Speaker, the Prime Minister, the President there, all of whom are, and we're going to start the budget session, of course. The budget speech, of course, awaited tomorrow. That's going to be the key, even when it comes to markets. But those are the visuals coming through with Prime Minister Narendra Modi sitting there. But let's quickly go and have a quick look at what markets are up to. You're seeing the Nifty, which is up around 0.6% or thereabouts. You're trading largely very close to the day's high, so nothing to complain about. While we started the day below the 21,500 mark, we have quickly breached the 21,600 mark now, and we are sitting very pretty, at least for the day. In terms of contributories, if I can quickly roll that forward, you're seeing both the big guns, HDFC and Reliance, coming to the forefront today. You're seeing RIL contribute roughly 30 points, HDFC Bank 40 points, and you have also an ICICI Bank coming to the party, around almost 30 points contributed there as well. So you're seeing some good contributions coming in from both the banks as well as from Reliance, which are some of the largest constituents of the Nifty. You're also seeing a drag coming in from L&T after the numbers that have come through. So that's the one big drag that's coming through. In fact, there are only 54 negative contributors cumulatively on the Nifty, of which 40 points negative is being contributed by Larsen & Toubro alone, now slipping 5%. That stock. I'm going to quickly shift focus to where the mid and the small cap indices are doing. At that end, at the broader end of the spectrum of the market, you're seeing good buying. You're seeing positivity, 1% higher on the Nifty mid cap, 1.5% higher on the Nifty small cap. And let me focus a bit on some of those. In fact, the Nifty mid cap, you have 73 advances in the Nifty mid cap 100. So the breadth of the market looking quite good. Policy Bazaar leading the gains on the Nifty mid-cap, 14% higher in trade today after a strong set of numbers. You also have KPIT Tech, M&M Financial up nearly 6% each. Both of those also leading the pack. You have the likes of a Voltus, which is up 6% as well, on the back of its earnings that it disclosed. Within the small cap space as well, you're seeing good positivity, 82 advances versus the 18 declines on the small cap 100 index. And you're seeing the likes of a UTI, second consecutive day of gains for that one. KEC and CAMS, those are the two other names which are leading the pack. Among the losers on the small cap, you have the likes of a Cyient, a VIP Industries, again on the back of numbers, VIP Industries, and Data Patterns, which is down 3.5%. VIP Industries obviously taking a knock, a poor revenue growth as well as EBITDA contraction that we've seen. So that's how it's shaping up in the broader markets as well. The Nifty Bank leading the rally, 1.5% higher on the Nifty Bank. Among other gainers, you have the likes of a Nifty Auto, which is up 1.2%. The Nifty Pharma is up nearly 2% as well. So you have a good mix coming through. There you go. Those are all the sectoral indices. If I can screen into, or rather zoom into the Nifty Pharma and understand which are the key contributories of the gains coming in there, because it's the top sectoral gainer. There you go. All the 20 constituents are in the green. You have the likes of a Dr. Reddy, which came out with numbers, a decent set coming out, and that one is up and away, 4% leading the Nifty Pharma rally today. Right, but we'll focus in on the mid-cap stocks because this is the small and the mid-cap show. And we have with us the management of Policy Bazaar. I have with me Yashish Dadia, who's the chairman and CEO, and Alok Bansal, who is the co-founder as well as executive chairman at PB Fintech, both of whom are joining us. And the stock is up and away. Yashish, a pleasure interacting with you. Alok, good having you.
Nice to be here. Thank you.
Right. So, Yashish, let me come to you. It's been a solid quarter, especially where new businesses are concerned. Your EBITDA has gotten better. and you're looking at an FY24 profit now. What is the kind of outlook for Q4? Do you build on this, or do you believe that this is where you will be for some time now?
I think our profit should be about double of what is this quarter in the next quarter, because it's one of the strongest quarters. Q4 is always the strongest quarter. But I think I don't like to look at things quarter on quarter. Focus on let's say a 3-year window. And I think if you took a 3-year window, our revenues are up more than 4 times in the last. If you look at 2021 and 2024, our revenues are up more than 4x, right? And thus, if you hopefully look at the next 3 years, it may not be 4x, it may be 2.5x, right? That you look at in the next 3 years. I think the simple thing is, every time we make additional revenue, roughly 30% of that, maybe a little less, little more, of that flows directly down to EBITDA. So if we increase our revenue by, let's say, 30% next year, then 8-9% incremental EBITDA should be created as a percentage of revenue. That's just a normal feature of our business, which is the operating leverage, right? And why is there operating leverage? Simply because there is a internet platform, there's a certain fixed cost which has been taken care of, and now onwards, of whatever extra revenue we make, we spend 65%, 70%, and the remaining 30% does not get increased. That's all. Sure.
Yeah, so I get the big picture. But let me switch over to Alok to try and understand how the top line will evolve. Alok, you've guided that FY27, PB Fintech will make 1,000 crore PAT, or around that range. Where does revenue go from here? Because your revenue growth has been steep over the last couple of years, but now with the higher base, can you continue to sustain that kind of number, or will it taper more towards the 30% kind of a mark?
No, we are very comfortable with 30% sort of growth rate. I mean, yes, there will be some quarters where you will see maybe 40, 42%, 43% numbers. But if you look at a CAGR level over like 3 years, 4 years, we are very, very comfortable with 30% number. And with that 30% number also, we should be able to deliver 1,000 crore PAT quite comfortably in FY27 as per our estimates. The levers are very, very clear. The number of people who are coming to Policybazaar for searching for their needs, the sort of tech and data analytics that we put in, the sort of operation layer we have across sales, service, renewals, claims, all that seems to work in a very, very beautiful way, in a very, put together, the which are going to sort of deliver the 1,000 crore PAT that we have talked about, and we are comfortable with 30% guidance in terms of the growth rate.
Sure, understood. And Alok, if I can stick with you, how does EBITDA therefore evolve? PAT, of course, you'll likely get positive FY24, given that Q4 is the strongest quarter, as Yashish has pointed out. So where does EBITDA and PAT evolve over, say, FY25, if I can ask you in the near term?
See, we don't have any specific number in mind for FY25. But if you look at our business, from EBITDA to PAT, there are not too many items. Yes, there will be some depreciation charge or finance charge as per the accounting norms, and there will be some other income coming of the amount of cash we have on the balance sheet. But overall, in our businesses, because there is not too many things which will go beyond EBITDA, you'll see that next year the whole EBITDA number itself will be positive. It's not adjusted EBITDA, but the EBITDA number itself. So yeah, there is no specific number in mind, but then just think about it. I mean, if you go by 30% over the base that we have this year, suppose the revenue this year is in the range of 3,500 to 3,600 crores. If you grow by 30%, you're talking about at least 1,000 crore plus extra revenue coming out of that. And at 30-35% of profit coming out of that additional incremental revenue, you're ultimately looking at a number which is somewhere between 300 to 400 crores incremental over what we delivered this year. That's just a very, very basic level of how it will work.
Sure. And how does, if I can switch it back to Yashish, you've done very well where the ARR is concerned, therefore maintaining that consistency on top line. What's really helping you stand out and therefore aiding that ARR number every single quarter?
See, over the last 16 years, we have invested a lot in educating the consumer about the need for health insurance and life insurance to protect against death, disease, disability. And what that implies is we are the go-to brand. And thus, we keep getting a huge amount of traffic. Beyond that, as the nuclear families increase, so if you look 5 years out, we had 70% of our business from metros. Today, we have 70% of our business coming from tier 2, tier 3 cities. So India is evolving. The young are evolving, nuclear families are growing, income levels are increasing, the awareness for protection is increasing. What we are doing is a good job in terms of disclosures. That implies that the business we are doing and the volume and quality are good for the suppliers. So in a way, all of this comes together. We are investing more and more in technology, in operational efficiency to make our operations more efficient. So at 3 levels, one is attracting consumers, second is doing the disclosure, and third is investing enough in operational technology and operational efficiency to make that part better. Those 3 essentially allow you to keep growing into the future. And the best part is the industry itself is growing. The bedrock industry of insurance is growing at 10-15% a year anyway. So growing at double that rate does not seem like a challenge. And if you look at the last 3 years, we've grown at an average of about 60%. We're talking about 30%. We're talking about half the growth rate for the next 3 years as a sort of minimum guidance. I think we are fairly, and just stick with that. Just growing at 30% for the next 3 years means about 3,500 to 3,600 crores of extra revenue in the next 3 years. And that is exactly where the 1,000 crores of extra profit comes from. There's no rocket science here.
Sure, point taken, Yashish. Let me quickly move on to the one key feature that stood out in this particular quarter. And Alok, I'll allow you to address this. When you're looking at new initiatives and the way those have really kicked in this quarter, I think that's really surprised slightly on the upside where investors are concerned. So now you're at break even on new initiatives. Your cash balances are strong. So I'm going to club these two. Where does new initiatives go in terms of profitability, break even? And second, what do you do with the kind of cash balance you have now?
Sure. So on the new initiatives, see, we do not have a specific number in mind that, okay, we have to get to a particular sort of profitability or a growth number in mind. We want to grow as fast as possible. New initiatives will not be driving the loss or profit. I mean, if you look at the console profit or a loss, say 3 years from now, it will not be a major factor either ways. But we hope that in 3 years, we are able to get to the EBITDA level break even. Right now, we are at the contribution level break even for new initiatives. You don't need to invest too much, but yes, we will be very, very keen that all our new initiatives continue to scale and continue to grow and provide more and more, strength to the whole company. Now, coming to your second question around cash balance, yes, we do have a very, very healthy cash balance right now on the balance sheet, and we are very comfortable holding it right now. We are quite, opportunistic in terms of where we need to invest that money. And the whole focus for the company right now is to get deeper into the value chain, whether it is looking at the reinsurance brokerage play, whether it is looking at working with our partners on new product creation, creating a claim support layer, creating a physical operation layer. So all these things are more of variable cost to finance. You don't need huge amount of investment as you look at all these layers. So yeah, I mean we'll decide about what do we do with the capital allocation. But right now, very, very comfortable with both the cash balance and the way our new initiatives have progressed.
Sure. I look forward to understanding what you're going to do with that war chest of 5,000 plus crore. But that another time, I guess. We're completely out of time on this one. Alok, Yashish, it's been a pleasure interacting with you guys and understanding what's happening with PB Fintech. Of course, the stock up and away. I'm going to slip into a very short break. We'll be right back and we'll continue to discuss earnings. We have Indian Metals and Ferrous Alloys Limited. Company's managing director will speak with us. Welcome back. You're watching the Small and Mid Cap Show on NDTV Profit. I have with me the management of Indian Metals and Ferrous Alloys Limited. We have Subrakant Panda, who's the managing director at the company. The stock is up nearly 7.5%, now almost nearly 8% now. So doing very well in trade on the back of those solid numbers. So firstly, pleasure having you here on NDTV Profit.
Good morning, Hersh. Thank you for having me on the show.
Right. So let me kickstart and try and understand as to, or try and set the context here. So, you know, your revenue has grown roughly 10% thereabouts. How do you assess the quarter?
So, you know, Q3 FY24 has actually been a very, very good quarter for us, because if you look at the corresponding quarter in FY23, basically our ferrochrome prices have moved up noticeably, while at the same time our input costs have gone down, and that is what has led to a sharp increase in the profitability by nearly 10 times. But I always make this point that you know, we are a company where you shouldn't be looking at it on a quarterly basis, because ferrochrome prices do tend to be volatile at times. And you know, you see these elevated margins when prices have moved up and costs have come down. But you know, that is all sort of you know, that can change a little bit as well. So it is always better to evaluate us on a, you know, over a period of 2 to 3 quarters and see how we have done on average during that period. Having said that, we have certain strengths which work very well for us. We are a fully integrated producer, which means we have our own captive chrome ore mines. And therefore, we are not, affected by the vagaries of chrome ore availability or pricing. We, of course, also generate our own electricity. But more importantly, you know, over the last couple of years, we have pared down debt, and we are now a long-term debt-free balance sheet. And that, of course, adds tremendous strength. And therefore, when we look at our expansion plans, and we are going to be spending about 2,000 crores or so over the next 7 to 8 years in terms of increasing our smelting capacity and backing that up by enhancing our ore raising from the current about 6 lakh tons to roughly double of that. And we are looking to do that primarily out of internal accruals and not even look to raise any debt, let alone dilute the equity. So a lot of things working in our favor. And we are, you know, going ahead looking at, as I said, adding to our smelting capacity in order to effectively utilize the resource base which is available to us by way of the captive chrome ore mines.
Sure. Point taken, sir. So two things aided in this quarter. One is your finished product pricing was better. Your raw material pricing has been also better. So both of those aiding profitability. How do you see the sustainability of some of these numbers over the next 2 to 3 quarters, as you would correctly put it? Is this a quarter where you've really stood out and therefore the next quarters may be more tempered?
So, you know, you've hit the nail on the head. As far as Q4 FY24 is concerned, the ongoing quarter, it will be slightly tempered for the simple reason that prices have cooled off a little bit, you know, courtesy all the geopolitical developments, including the, you know, the Red Sea situation and all of that. Although we are not directly affected by it, but you know, that has had a slight dampener on effect on commodity prices in general, and ferrochrome is no exception. So we'll see a slight tempering off in the ongoing quarter. But as far as the full year FY24 is concerned, it is still going to be one of our best ever, you know, the second best in terms of profitability. In terms of our ferrochrome production, we are looking at an all-time record this year, roughly about 6 to 7% higher in volume terms as compared to FY23. In terms of ore raising, we are going to cross the 6 lakh ton mark for the first time. In fact, registering 6.7 lakh tons of ore raising. That's the budget for the ongoing financial year. And that will further go up in FY25, crossing 7 lakh tons for the first time. And that is the basis on which we have made our growth plans. So if I were to look at, coming back to your specific question about pricing, current ongoing quarter will be slightly tempered. But in as much as the first half of FY25 is concerned, we are fairly confident about maintaining margins. Broadly, EBITDA margins should be 20% plus or thereabouts. In terms of our budgeting for the year, we have been slightly conservative, as we always prefer to do. And if you look at where prices are at the moment, I think downside is very limited here on, because the cost structure for non-integrated producers is already at a sort of at a point where it doesn't make sense for them. Therefore, I don't see any downside in ferrochrome prices. I see the potential for some upside in the next couple of quarters. And for an integrated producer like us, where the costs necessarily doesn't move up when the commodity prices start moving up, that translates to the potential for better margins.
Sure, absolutely. So you've given us a good overview with regard to even where your capacity goes in the next year. But if I can have a better overview with regard to where you see capacity go over the next 3 years, and you believe utilizations will continue to remain extremely healthy, is that how one should look at it with the capacity going up? So that's my first question. My second piece to that question is to try and understand that you also had a bid which for which the Supreme Court has actually sanctioned it to another party. Now, you are entitled to a compensation. If you can give us an overview of how much that compensation is and when will that come?
Sure. So the first question, our current ferrochrome capacity, installed capacity is 284,000 tons, and as against that, we are, as I said, expecting to produce close to 260,000 tons in the ongoing quarter, and expect to maintain the same volume in FY25 as well. In as much as our expansion plans are concerned, in phase 1, we are looking to add 100,000 tons of ferrochrome capacity in Kalinganagar in Jajpur district of Odisha. And we are expecting that to be commissioned, close to, I would say, Q2 or Q3 of FY26. So let's say around somewhere around July to September of 2025 calendar year is what we are looking at. And yes, we expect utilizations to be robust, because we follow a principle of long-term contracts where prices are reset either every month or every quarter, depending upon the customer. But the tonnages are offtake is guaranteed, and that has worked well for us, because we don't want to. We certainly have the ability to catch any upside, but we don't want to purely go on the spot market, which is where then tonnage placing tonnage may become a problem in certain times. Now, as far as the coal block compensation is concerned, that's been a long running saga. But finally, the nominated authority in the Ministry of Coal has given a final compensation order valuing land at about 352 crores. We have already received about a little more than 20 crores for statutory expenses. There is some mines infrastructure in there. So broadly, that will work out to about 390 crores, of which a little more than 20 is already with us, has been with us. The new allottee has chosen to litigate that number in the assigned tribunal, but no stay has been granted. And of course, it is their right to challenge that number. We also feel that the final compensation order is slightly undercooked in terms of there are certain elements which were included in the initial compensation order, the interim compensation order, which has been later on taken out, and we believe we're entitled to that. But be that as it may, since no stay has been granted, we expect that money to come to us sooner rather than later. And that will, of course, add to our already healthy cash balances. And that's what gives me the confidence that we will be able to maintain our long-term debt-free balance sheet status, even as we take up significant expansion over the next 6 to 7 years.
Understood, sir. Thank you so much for that comprehensive reply, but we're completely out of time on this one, Mr. Panda. It's been a pleasure speaking with you. More on the other sides. Thanks for staying tuned to NDTV Profit.
budget. And there was expected to be a little bit of caution, but that doesn't seem to be playing out right now, with the benchmark gaining, as I said, about 0.8%. The mid-cap index up about 1% or so, and you have the small-cap index that's up as much as 1.5%. Let's take a look at some of the key contributors then. And from the benchmark index, you have a few big names, of course, that are doing well. HDFC Bank gaining back some ground, and Reliance Industries also proving to be one of the gainers and leading to the big weight on the benchmark. You have about 20% of the benchmark that is